Hello traders, you're welcome to this video and I welcome you back to the Forex Geek channel. In this particular video, we are going to be discussing the Trend Intensity Index Indicator. For short, it is called the TII Indicator. Alright, it's a custom indicator, meaning that you would have to download it from a reputable source online, and after downloading it from an external source, you would have to add it indicator file. You have to add the indicator file into your MetaTrader indicators library. After that, you will then be able to load the indicator to your chart. So having already done that, I'm going to be adding the indicator to my chart right away. The Trend Intensity Indicator. Okay, here we go. So this is the Trend Intensity Indicator. Now, this indicator helps traders to determine market bias, all right, and it helps to track the strength or weaknesses of price trends. Okay, the indicator is quite straightforward. You know, it can be used both by beginners and experienced traders. So how do you use this indicator to identify good buying and selling opportunities? When you have the Trend Intensity Indicator at the extreme upper level, as you can see, the indicator has an extreme upper level and an extreme lower level. You can see demarcated by the 80 level and the 20 level. So when the indicator is above the 80 level, it shows an extreme upper level and there is a possibility of a bearish reversal. Okay, and when you have the indicator in the extreme lower level, it shows the possibility of a bullish reversal. Okay, so now when the indicator is in the extreme upper level and the color changes to gray, when it changes to this gray color and they have the indicator drop below the 80 level, that is a signal to enter a sell. All right, so when the color is in the gray, when the color is gray and the indicator is moving downward, it shows that there is bearish momentum. Okay, it indicates that there is strength in the bearish trend. All right, when the color is blue, you don't need to enter a sell just yet. But when the color changes to gray, trending downwards, that is your cue to enter a sell. And then when the indicator enters the extreme lower level, you don't need to exit your sell immediately. The reason is that even after the color changes to this orange, there is a possibility of a sell continuation if sell momentum intensifies. But as the color changes to orange, it shows that the sell trend is getting weak. As the color changed to orange, it showed that the sell trend is getting weak. So ideally, you can either decide to exit your sell at support levels, or you can wait for the TII indicator to change back to gray, pointing upwards. When that happens, you can exit your sell trade. Now, in the case of a buy, when the indicator is in the extreme lower level, it's going to be in orange color, right? When the color changes to gray and the indicator crosses the 20 level upwards, it's a cue to enter a buy. All right, so when you enter a buy trade, you can then set your stop loss below the swing low, and for your take profit, you can use resistance levels, or you can decide to wait for the indicator not just to enter the extreme high level, but to change back to gray and start turning downwards. Now, I'm going to be straightforward. Using this indicator to determine your exit level sometimes might lower your profit, okay? Because when the indicator gives you a sell signal, you might have already given back some profits to the market. For example, if you are in a buy trade and you wait for a sell signal to exit your buy, you will end up giving some profits back to the market. Imagine entering here and exiting here, right? Entering here and exiting here when you had the opportunity to exit here. So If you want to exit, I will recommend using other indicators to confirm or using resistance levels. For example, you can decide to add the moving average indicator. You can use that to exit. For example, when the price drops below the moving average, you can exit your sell, your buy trade. And in the case of a sell, when the price climbs above the moving average, is to exit your sell trade, right? Dropping below the moving average is a sell signal, so you exit your buy trade with that signal. Climbing above the moving average is a buy signal, so you exit your sell trade with that signal. So it's either you use the TII or you use resistance levels, or support levels, depending on the direction of the trend, or you use other indicators to confirm your exits and even your entries too. Okay, so having talked about that, let us talk about risk management very briefly. Okay, so when you are trading, ensure that you observe good risk management. All right, do not trade with an amount that you can't afford to lose. Okay, and make sure that you always pay attention to risk to reward ratio. For example, if you are risking $1, your potential profit target should be minimum of $2. All right, for the sake of risk management, for the sake of managing risks effectively, do not risk more than 2% of your capital in one single trade. In addition to your risk to reward ratio consideration, do not risk more than 2% of your account balance in a single trade. All right, it is very important. The reason is, if you have, for example, if you have, a series of losing trades, right? If you have a series of losing trades, keeping a small percentage of your account per trade is going to, make the situation, less troubling. Because let's say you have a, consecutive 5 losing trades, right? There's going to be 2%, 2%, 2%, 2%, 2%. It's going to be 10% of your account that you lost. But if you are using 10% of your account in one trade, it means you're going to be risking losing 50% of your account balance. And now, mind you, if you are also considering good risk to reward ratios, right? Even if you have equal number of wins and losses, you're still going to be on the winning side. Because let's say you lost 5 trades and you won 5 trades. If you lost 5 trades, let's say you were risking $10 in one trade and you lost $50 from those 5 trades. Now, because your risk to reward ratio of 1 to 2, the 5 trades that you won would be $100 profit. So at the end of the day, you lost $50, you made $100. That means you are in $50 profit. Okay, that means you are still going to be in $50 profit. So basically, that is it. I hope you found this video insightful. Kindly like and subscribe for more trading insights, and don't forget to hit the notification bell so that you don't miss out on more trading videos like this. In the meantime, thank you for watching and happy trading.